COVID-19 pandemic has hit India's steady flow of remittances. As many major economies are destined to slip into recession this year, Indians living in those countries are also likely to send far less money back home. While a bulk of these remittances are towards the upkeep of the family back home, while some are also towards financial investments. NRI remittances have also been India's bulwark in financing its current account deficit. Thankfully, due to the record low prices of oil, India's import bill is likely to be within the comfort zone, thus putting less pressure on the CAD or the current account deficit as well. The World Bank also projects remittances in India to fall by about 23% to $64 billion in 2020 compared to a growth rate of 5.5% and receipts of $83 billion in 2019. Now, India is the biggest receiver of remittances. The effect of coronavirus is now expected to be visible in the form of a global slowdown and travel restrictions which are currently on and which will also affect migratory movements, keeping remittances subdued in not only 2020 but also in 2021 as per the World Bank. Now, more than 50% of the remittances come from the Middle East. Now, these economies are built on oil revenue, and the recent crash in crude oil prices does not bode well for most of them, as it increases the chances of layoffs and of immigrants being sent back home. Now, this is particularly bad for Kerala, which accounts for 2.5 million migrants in the Gulf region and may see a 15% drop in remittances. Kerala receives over 1 lakh crore rupees in remittances and may be the worst among the states that will be hit. 8 countries including the UAE, the US, Saudi Arabia, Qatar, Kuwait, Oman and the United Kingdom and also Malaysia account for more than 80% of the total remittances received by India. The UAE, with more than 3.3 million Indian expatriates, has traditionally been the largest source of remittances to India. Now, apart from Kerala, the other Indian state which will be most affected is Punjab. Now, it is estimated that the NRIs of Punjab origin remit 800 to 1000 crore rupees per month back home to their families. Now, these NRIs are mostly settled in Canada and the UK. Investments by NRIs in real estate is a major growth driver of Punjab's property market as well. Now, remittances to India are mostly routed through private sector banks, followed by public sector banks and also foreign banks. Now, banks dependent on these NRI deposits also will be hit and could be at the receiving end of the remittance impact as well. Now, battered by a triple whammy of the COVID-19 pandemic, a glut-driven oil price plunge and also a steep meltdown, most of the countries are in a state of partial lockdown, with most economic activities also at a standstill. A drop in remittance will definitely hit the lifeline and insurance for families left behind, apart from emerging as a pain point for the economy.